Good afternoon, everybody. This is Bob Iacchino from Path Trading Partners, along with my co-founder, Mike Arnold. It's April 19th. This is a PM Path Chat covering the futures markets. Mike is going to cover everything, and boy, where do I start? Mike's going to cover the VIX, the S&P, the Dow, the Nasdaq, crude oil, copper, gold, silver, and where do I start? Nothing really economically. The only real economic news was the Fed Beige Book. And this is obviously excluding the Eurozone Consumer Price Index, which I talked about this morning on the FX Path Chat. But the Fed's Beige Book, really there was nothing in the Beige Book that would stop the Federal Reserve, or rather the FOMC, from raising rates in June, except the likelihood of a rate hike in June has dropped below 50%, according to the CME Fed Watch tool that you can get at the CME's website. There is very few people left talking about a June rate hike, considering some of the slowing data we've gotten, some of the geopolitical turmoil, and an again weak stock market that we saw today. The dollar rallied a little bit, helped crude fall a little bit more. As the dollar rallies, crude gets cheaper. That's just the inverse relationship that they have. In terms of the crude oil numbers, today was the largest loss for crude oil, the largest single day loss for crude oil in 6 weeks. And it was the lowest settlement price in 2.5 weeks, down in that, below that 52 level, down near 51. The gasoline inventory build was a surprise. The EIA released their data, and there was a 1 million barrel draw of crude oil, but there was a 1.7 million barrel increase of petroleum or gasoline. That was a big shock to the market. Also, increased production. Crude oil refinery inputs averaged 16.9 million barrels per day. During the week of April 14th, that's 241,000 barrels per day more than the previous week's average, and refineries are now operating at 92.9% of capacity. The EIA is predicting higher demand, but if demand doesn't pick up quickly, we're back above that 32 million barrel over last year at this time, and we're well above the 5-year average. We're at the upper end of the range for inventories versus the 5-year average. So crude oil got hit pretty hard. I'm going to turn it over to Mike to let you know what he's seeing on everything. The VIX tried to come off, as you can see on the chart here, but rallied back up above the significant levels that Mike will talk about. So geopolitics still in the game, and you'll see this in the equities. A lot of canaries in the coal mines, but let me turn it over to Mike, let you know what he's seeing on the charts. Mike, it's all yours.
Okay, great. Thank you very much, Bob. A lot to go through, so let's get started. First with the VIX. We're watching for a close back below our significant levels. We got the intraday move, which was interesting. It collapsed all the way down to the bottom of the rotation zone, retested this trend line, and then closed back up above our significant levels. So still no end to this VIX run up yet. There is still worry in this markets. It did pull back a little, but so we'll have to keep watching. No call for an intermediate term or a short-term bottom yet. Let's take a look at some of the stock futures and indices. First, transports rallied up today into the R zone, slightly through the significant level at the 90.25-27 level, fell back down, pretty much closing at the 37.5 GAN level, around 89.77. On a move higher again, there's going to be resistance right around that 9,000 and 9,006, then our significant level 9,022, and now the upper end of the R zone is about 9,059, so watch that, which would be just slightly above today's high. If we do get through that, there is not much until we get up to around the 91.14. If it pulls back and heads lower tomorrow, I'm going to be watching for support around 89.20 level, and then we come in at 88.99 to 8900. It's going to be very key support. If that's broken, it means we break this trend line. Then the next area down we will be watching for is our defining point, which is 88.76. Let's move over to the industrial average. This was very weak today, actually closing below our trend line defining point, moving down below 20,423 to 50% GAN level. So if it continues lower, next major area we'll be watching for potential support is 20,347 to 350. Then if that's broken, we're looking for a possible move eventually all the way down to 20,237, which would be the bottom half of our GAN rotation zone. So those are the key levels there. To the upside, if it does rally up, you're going to have some resistance right around the 20,460 area. And then we're looking for a potential rally back to 20,518 to 520, where we have the about 20,537. We have a flat 50 period exponential moving average and the declining 8 period exponential moving average, which is the bottom of the rotation zone. So that will provide substantial resistance. If that is broken, we can watch for a possible move up to the top end of the rotation zone at 20,600. Over to the S&P. S&P has not broken below its new trend line defining point. If it does head lower tomorrow, minor support 23.29, then we're going to be looking to break this trend line and possibly trade down to the defining point, which is 23.2275. If we get a move below that, especially on a close, we could watch for it to potentially drop to 23.13 area. On a rally back up, minor resistance 23.37, which is a minor significant level for us, and then we'd look for a potential rally back up to the 23.45 level and then the 23.47 area. If it were to get through there, next level higher is 23.54. Finally, over to the Nasdaq, which was the strongest market today that we're looking at right now, rallied up to this prior target level we've talked about, 54.14, 54.15 area, and then fell back down into the close. If it does rally up again, 54.15 is going to be key, followed by the highs for today, 54.30.75. And if that's broken, we're looking for a potential move up to 54.43.75. On a pullback, minor support coming in right around 53.75.50. Then we're looking at 53.65.91. Then we're looking to 53.38.83 as key. If that is broken, you have a rising 50 coming in at 53.32, and then we don't have much down until about the 53.16.28 area. Let's switch over to crude, which had a huge move today. Very big drop today. Ended up just closing above our significant level at the 50.81 mark. You can see it broke through there for a bit and snapped back above it, which is many times what these significant levels do, which is why we use them for targets a lot of times or to keep stops beyond. So on a rally back up tomorrow, 51.24, first area of resistance, followed by right around 51.52 to 51.62 is going to be the next area of resistance. The next higher area is 52.07. On a move down lower, first level support about 50.51, followed by 50.38. Then if that's broken, you could watch for a possible drop to about 49.91. And then eventually, if it continues lower, we're looking for 49.54. Over to copper and the metals. Copper traded down to our GAN cluster we've talked about, right around the 249.43 to 249.75 area. Bounced strongly back up. Pretty much closed with a long-legged doji today. So that's pretty key. Now, if we do rally again tomorrow, minor resistance at 253.50, followed by 254.18, followed by 255.88. And then if all that's broken, next major level is this 257.55. On a move back lower, watch for a retest of today's lows right around 249.60. Then if that's broken, we're looking for 248.64 and a possible retest is bottom of the channel, 248.16. If all those eventually are broken, next major level down we now have a cluster lining up about 245.30 to 245.48. So over to gold. Gold pulled back, tested the rising 8 EMA, closing above it. If it again continues lower tomorrow, first line of support is 1275.40. Then we're looking for 1271.70, followed by about 1268.10. And then if that's broken, 1265.10. On a rally back up, very minor resistance at 1284.50, followed by 1291.70. And then we're going to be watching for the retest of our significant level, 1294.70, followed by 1297.90. Finally, over to silver. Silver came down, bottom of the rotation zone and a flat 200 right on 1811. If we go lower tomorrow, minor support on 1806. If the trend line's broken, watch for $18, and then we could possibly trade down to 1789 to 1786 area right down here. On a rally back up, 1828 is going to be key. We have a hooking 8 EMA and a prior GAN level, and then if that's broken, 1842 is the next area higher. That's all we have for you. Back to you, Bob.
Thank you, Michael. Earnings season continues after Goldman Sachs's miss yesterday. Morgan Stanley beat pretty handily. They beat on profits. They beat on EPS. So earnings, overall mixed to slightly good, was not enough to save the stock market as the day went on, obviously. So you saw Mike showed you that the Nasdaq was the only one to finish ever so slightly positive, and the rest were just weak for most of the second half of the day. Cheers, everyone. Thanks for watching. We'll talk to you in the next Path Chat.